Good morning and welcome to this weekly market update from AGM Markets. Today is the 17th of February 2014. Hope you all had a great weekend. What we'll do today in this video is go through some technical analysis on Euro dollar, cable dollar, Swiss, Aussie and gold. I'm just going to review what's been going on in the markets over the past week, and well, I'll be looking at long-term charts as well, but also try to review some of the interesting moves that are going on in the markets. We'll briefly look at the weekly time frame, and then focus on the sort of daily 4-hour and 1 hour. Just look at any sort of interesting setups that are in play, and hopefully will be of some use for you trading this week. I will not make any trade calls recommendations. You trade your own risk. If you please read a full disclaimer on our website, which is www.agmmarkets.com. Also, for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple, and the gold is a 200 simple moving average. Okay, then let's have a look at the euro dollar. So as we're doing these videos on a weekly basis, we don't want to dwell too much on the sort of setups, but we've been speaking about this for a while now. It is good to keep it in mind. It depends what sort of time frames you trade, but in terms of context, this setup is still in place. This is the fib from the highs of 2011 to the lows of 2012. The sellers are trying to cap it at the 61.8%. we got that nice sort of spike off of that, but you can see the last couple of weeks, well, 2 weeks ago we got, in fact 2 and 3 weeks ago, we had 2 tests of the 50%, and it's acted as support. And you can see last week's candle, a nice sort of bullish continuation pattern. So it looks like that euro wants to sort of grind higher throughout the week. We may start off with some sort of retracement over maybe Monday, Tuesday. This is what you tend to happen, I find, with these sort of candles. They like to form a sort of similar candle. So that one there, you can see there's a lower wick. So that lower wick may have been formed, I can't remember now, it may have been formed on the Monday or Tuesday, and then you rally for the rest of the week, creating this sort of candle pattern. So I wouldn't be surprised to see some sort of retracement in the first couple of days, and then it continue to grind higher towards the end of the week. We may even get a test of this 61.8% retracement here and get another reversal, but it'll be interesting to see. It is good to keep in mind this weekly chart, but that's the only the sort of setup that I mainly focus on. Well, in fact, the other one, is this one here, which is pretty much the low of 2013. But this is the same setup as on the daily chart. So let's flip it down towards. Let's flip it to the daily chart now, so you can see this fib here, pretty much the low of the chart on this daily chart to the high. It's all about the 50% round here, remember, nice spike off the sort of 1.3323s, but we're still in sort of mid-range here between this 0% and 50% line. But what is interesting, I think, on this daily chart is one setup I've been keeping an eye out for, especially last week, is this move here. Let's zoom in a bit. So this move here, you can see we had a nice test of the sort of 61.8. Because that fib there, was technically from there, but then if you move it down towards this sort of correct setup, so the recent, the obvious swing low to the swing high, significant swing low to swing high, you can see previous resistances at the 61.8. We got a couple of tests at this 50% level last week, which was the sort of key line in the sand, because it was also previous resistance around here. But we've got a daily close above that, and you can see, I think we had a gap higher overnight. We did have a gap higher. Just flip it to the 50-minute. You can see there, gap higher that filled very quickly as well. So you can see we've opened above this 50% level, and we're now sort of floating in between this. So it needs a break either side. You'd have to say, going back to that weekly, what I said is I'd expect a sort of retracement for the first couple of days maybe. So what it could do is potentially retrace slightly towards this 50%, and then it could act as support, which was also, remember, its previous resistance, and then we could sort of grind higher and maybe close above this 61.8. I would not be surprised to see that. Of course, it doesn't have to do that. it can retrace back down, and sellers could say that this setup is still in play. Sort of sellers selling at the sort of 50% level of perhaps stops, wide stops above the 61.8, and they'll want to see this grind lower towards the 0% line. Remember that this sort of setup here, it's sort of, well, we've had a sort of clear failure at highs here. If we look at this resistance level at the sort of 138s, pretty much a double top there, a lot of people would say. So the double top players will be looking for this to retrace back down towards the 50% level. So there's nothing stopping this setup playing out and coming down to the 0%. So it'll be an interesting week. It's very interesting first few days, really, because I think a daily close either side of that sort of 61.8%, 50% range will really, I think, will really dictate where we go over the next sort of few weeks. Really, I think it's a key week in terms of this euro dollar. In terms of shorter term charts, I mean, the 4 hour is still it's the same setup that I just drew up there on the daily, so that's still in play. You can see some more interesting price action on that as well. The spikes, when you look at that to the left there, nice candle action, nice spikes around here as well, and here. In terms of sort of moves we had last week on this 4 hour chart, this is a nice move. So in terms of just shorter term plays, the bulls looking at this sort of fib here, nice retracement down to sort of 50%, 61.8% range, and we rotated high and taken out those highs. So that was a nice move in terms of last week. But it's been in terms of levels as well. I mean, if you just want to look at the round numbers, so let's draw up. So you've got 136s there, nice resistance you saw around here, and then if you just sort of play in sort of 50 pip increments, so then got 136.50s, 137s. There's always plenty of interesting moves out there. You can see, look at those sort of candle action there, spikes, and then retracements back down towards the lows. You can then draw 135. So in terms of sort of shorter term, if we look at these shorter term charts, it's all about just playing the round numbers. I think just look at the 50 pip increments and sort of play the ranges. They're always interesting to see. I mean, look, if you just flip to the 1 hour time frame there, you can see, look at all those candle spikes there. I think we spoke about this in last week's video. How there's always plenty of sort of short term opportunities out there in the markets. If you draw this other 50 pip increments, so this will be 135.50s, I think. You can see it just came sort of shy there. So this sort of chop range, I remember speaking about this last week's video, how it was just chopping for a while, and you can see there's just plenty of opportunities there if you look at the shorter term charts to sort of scalp, I don't know, 20, 30, 40 pips, for example. But yeah, in terms of this week's, we spoke about the daily, how there's quite a few interesting setups out there. That fib, definitely keep an eye on. That's in terms of sort of the weekly outlook and one key setup, that's definitely the key setup I'll be focusing on. Okay, let's have a look at cable. In cable, in terms of the weekly chart, I think it's very interesting. We've been speaking about this sort of resistance for a while, and how it was holding and holding. In fact, last week I thought it was due for a retracement. To be honest with you, you can see we had multiple candle spike highs, 1, 2, 3, 4 spikes there, and then that previous week candle. I mean, yes, it's got a red candle body, but I suppose the lower wicks should have been the key there to tell us where we were sort of heading. But I thought it's been due such a sort of healthy retracement down towards these moving averages, perhaps. That I thought the odds would be towards the downside for last week, definitely. But we had Mark Carney speaking last week, and it seems that every time he speaks, the pound gets stronger no matter what he says. So, and that's what we happened last week. We just blown out all these stops above the sort of 2013 highs, and we're just ripping higher now. We're above the 2011 highs as well, and now we're testing these sort of the 2009 spike highs here. So I mean, keep an eye out on that. In terms of levels, well, 168 is a key line in the sand here in terms of this weekly chart. You can see we didn't get a weekly candlestick close above that in that sort of 2009 period. We had three weekly candlestick piercings above it, but no closes above. So key line in the sand, keep an eye on that. You can see that even well on the daily as well, so keep an eye in terms of the daily candlestick close, I'd say, today, because if it closes at a reversal hammer, then I'd expect some sort of retracement, definitely. Yes, in terms of Asia this morning, we had a gap up that filled quickly, and then we had a brief rally higher. You can now see we are starting to retrace at these sort of 168s. So definitely key line in the sand. So I think the end of the daily candlestick close is crucial today. If we close above them, we'll continue to rally higher, but a reversal hammer, which would, if you're going to have a bearish candle, it's going to be that pretty much. Due to this sort of the daily spike high, then I expect some sort of healthy retracement. In terms of this sort of daily, well, in fact, I mean, yes, this would be the fib a lot of people are looking at, but we're still a long way away from that, in my opinion. I mean, if we do get this reversal candlestick today, then that would obviously be one that you'd have to keep an eye out for. But in terms of shorter term moves going into the week, this 4 hour, definitely keep an eye on this move here. So this is a recent swing low. These swing highs are the highs of 2014. Keep an eye on this fib. A lot of people were looking at this one. I thought the 50% comes in at one spot 63.37s. Let's say that we've put in a top here. That is where the 50% comes in. Also keep an eye on these moving averages as well, because they could come up and form some sort of confluence with these fibs. But then also keep an eye on this swing high here as well, which surprise comes in at a sort of nice round number as well, which is the one spot 66.50s. So that's the levels that I definitely keep an eye out for. So we've got key levels here, 168, 166.50s, and then this 50% round here. And if we're looking at the 1 hour chart as well, that's all I'd personally be focusing on here. So that's going to leave my chart for the rest of the day or next couple of days. It depends how quickly we retrace here, but it looks like it wants to retrace quite quickly. We could get some serious move. Now you can see it's falling as we speak, so keep an eye on that. That's my view for cable. Dollar Swiss on the weekly is still not majorly interesting. It does look like it's starting to slide. You can see last week's candle. It's quite a bearish candle. It engulfed the previous one, but we are sort of testing this interesting support level here, which is it's the ones, it's a 0 spot 90s, pretty much bang on. No, it's not. It's the 0 spot 89s. I read that wrong. Yeah, 0 spot 89 is key line in the sand for this dollar Swiss in terms of the weekly chart. You can see the multiple spikes below. There's 5 candle spikes below, and closes above. But we haven't had we haven't had a strong rally up. You thought you'd at least come up and test this sort of 50-week moving average here at the 0 spot 92s, but it just hasn't got a decent bounce up there. So I think a lot of the weekly players will be looking at this move here in terms of a sort of buying zone, but of course we're a long way away from here. But any of you that sort of trade the weekly swing moves, then that would be one that I'd personally be looking out for. But I don't think it just needs to get below that key support, to be honest with you. We need a weekly candlestick close below that. But you can see this is what the long-term sellers are looking at here. This swing from the highs of 2010 to the lows of 2011. This 61.8% got a lovely, so it had a nice retracement up to 61.8, and it's just grinding lower. So the sellers are going to want to see this come all the way down to this 0% line here at the 0 spot 70.66 level. But in order for that, we just need a weekly candle close below this, and then we could have a significant drop. Especially if we break these 2013 lows here, it really could move down very fast here. In terms of the daily, it's all about that 89 handle as well. The same thing really. That's a lovely couple of candle reversals there. Remember we spoke about that a while ago with a nice rally upwards, and the same thing could happen here. You can see current daily stick, well, the daily candlestick is forming a nice hammer currently, so if we do get a reversal, then keep an eye on that. We could retrace towards this 50-day moving average. I'd have thought definitely that's what where the buyers should be sort of aiming, and then yeah, just keep an eye on the 100-day and the 200-day as well. In terms of the shorter term moves, the shorter term sellers really will be keeping an eye on these fibs, I would have thought. So from that sort of swing high, that recent swing high, pretty much the highs of January, so the highs of the year, to that low there, the 50% coincides with previous resistance there at the 0.9028, or the even shorter term players. I would have thought the shorter term aggressive players, we look at these sort of the smaller fibs here, so the 50% there comes at 0.89, so keep an eye on that for any sort of interesting price action. In terms of the Aussie, we've said it's been due a retracement for a while, and we are starting to get that now after this sort of significant sell-off. Previous 3 weekly candles have been green, and it looks like it just wants to keep on grinding higher towards this 50-week moving average. We've spoken about this fib many times, how it played out off that 50%. So what I'd put, well, a lot of people were looking at that move there, so just extending the low and keeping the same high. But me personally, as I'm a shorter term player, I'll be looking at this fib here. So just selling the sort of the bounces really. This will be a very, very popular move. And when I say, well, the reason I say popular move, the popular moves tend to be the best ones because more people are looking at them, so more sellers I'd have thought would have orders at the sort of 50% here, as it's a more sort of obvious swing move. And this is the same thing with the daily here. So the daily, the 50% here comes at 0.92, so we're still a long way away from that. We're still 170 pips away from that, but you never know. We could easily get that come up and test it this week with sort of aggressive moves in Aussie. We'll look at the Forex calendar in a minute. If there's any Aussie data out this week, I think there is. But you can see we're currently getting halted here at the 100-day moving average. So if we're going to come up and test this 50%, we need to get a daily candlestick close above that. In terms of the shorter term moves, let's say we do get some sort of retracement off that 100-day moving average. A lot of buyers I would have thought would be looking at this fib here on the 4 hour. The 50% comes in at 0.8865, and that coincides with these sort of moving averages here as well, and also previous support around here, previous resistance around here to your left, and also if you look here to your left as well, it's previous support. So it could be an interesting level that the 0.8865s, or if you want to play the round numbers, just call it 0.8850s. You can see that lines up with this sort of previous supports here to the left where I'm hovering over my cursor. In terms of the 1 hour, same sort of thing really. I'd keep an eye on that. I mean, a lot of people the aggressive dip buyers will be looking at this fib here, but I don't think that's the greatest fib, to be honest. I think if you're going to get a retracement, it's going to be a bit more of a healthier retracement down towards the more obvious swing moves. So I'd personally be looking at that one. But if you're an aggressive buyer of dips, then this fib here, the 50%, comes in at 0.8998, so basically the 0.90 handle. In fact, I mean, as a person would be looking at fib, I'd just keep this because it's a key level, the 0.90s. Definitely got to keep that on your charts and keep an eye on the price action, because it's a significant level. You can see we had a lovely spike there, sort of bit of interesting action there. And on the 4 hour there, you can see a lovely spike there, and on the daily as well, it's been a key level, so keep an eye on that. Okay, that's the Forex done. Let's have a look at gold. Gold started to move a bit now. I mean, it's been quite quiet recently, but last week's candle, a nice bullish engulfing candle. It's just generally a really bullish candle. We've been saying it's been due after this sort of double bottom here, this bottoming out. I've personally been saying on these videos it's due to sort of retrace up towards this 50-week moving average. You can see it's currently doing that. It's getting quite near that at the minute. So keep an eye on at the end of the week here, if we do come up and test that, see what the candle's looking like. In terms of the daily, one fib I'll personally be looking out for is this one here. So recent swing high, significant sort of clear swing high to swing low. See what we personally just blasted through the 50%, but keep an eye on the 61.8. If we do test that, keep an eye on the price action, see what it does. In terms of the let's delete that. In terms of, well, let's say if we start to retrace down, so in terms of, well, let's say if we in fact, let's just say we've topped out now. For example, one fib I personally be keeping out for will be this one here. So this is the low on the 4-hour chart. So the high, you can, well, funny enough, the previous 4-hour candle, the last couple of candles had a decent upper wick here, so we could get some sort of a quick retracement similar to Aussie. Of course, they do quite a similar thing at times. But yeah, I'd personally be looking at this fib. The reason why is because it's the sort of the obvious one on the chart. Therefore, should get some interesting price action. And you can see this 61.8 here has previous support as well. So if we come back down towards the 61.8, then it should be an interesting. It should get some interesting price action. I wouldn't be surprised to see a reversal there, but of course we're still a long way away from that. So, but in terms of the move, that's pretty much it on gold really. So we've got the two key fibs there, and of course keep an eye on the round numbers as well. So sort of 1250s coincides with these fibs around here inside this sort of zone, and then in terms of the shorter term moves, let's say if we come back down towards 1300, keep an eye on that, as that's a big round number. And yeah, that's it for gold really. I mean, gold I haven't been paying too much attention to. I think there's more interesting moves, especially sort of euro and cable. They're the main two that I focus on. But if we do come down towards these two levels, I'll definitely be keeping an eye out for. Okay, then that's all for today. Hope you found that video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube channel, or send us a tweet to our Twitter feed, which is at AGM Markets. Hope you found the video useful. Hope you have a great week trading. I'll catch you next week. Thanks for watching.